Hello traders, welcome back to another video. In this video, I'm going to demonstrate and explain these powerful candlesticks here that we see. We are going to start with the engulfing candlestick and then we are going to cover the hammer candlestick. In this video guys, we are going to cover everything that you need to understand these two candlesticks here. If you understand these two candlesticks, it will make your analysis very simple, okay? You will also be able to enter the market perfectly. You will also be able to place your stop loss properly. And then another thing is that you will have better understanding of the market. So guys, what you need to understand is that this video is for someone who is a beginner, a professional trader who needs something like to improve into their trading, or someone who is trying to improve their trading style. This is just pure price action. So we're going to cover everything in this video so that you can understand properly and use this into your advantage and properly understand the market behavior. This video is just going to cover only two candlestick pattern. I will show you throughout the video with some few examples so that you can understand properly. This video might be long, I don't know, because I'm starting to record now. So let's move on with the video so that we can understand what we are going to cover. This video here guys will help you to understand the behavior of a candlestick pattern. We will also cover how we can use this candlestick pattern to use it to our advantage into the market. And also I will show you how this candlesticks patterns behaves and tell us what we can predict into the market in the near future. Okay, so this is going to be pretty much simple to understand, but I'll try my level best to explain everything properly so that everybody can understand after watching this video. And after watching this video, you have to go and backtest this, because this is going to be an important video for everyone to use it. Even if you are a beginner, I'll try to explain it very simple so that you can also understand. So let's move on with the benefit of this video. Here we can see that we have a table here. We have a table for engulfing candlestick pattern and then a hammer candlestick. Let's see. Drawing a supply and demand zone, we can use an engulfing candlestick and even a hammer candlestick. So that means it ticks all the boxes. Setting up take profit levels here is sometimes, but it's just yes, obviously. Even here on the hammer candlestick, it can still help us to make proper take profit levels. Best entries, I prefer both of them, but this one is the best for me so far. But this one here is very good too. I will show you throughout the video how this thing can also benefit the hammer candlestick or a rejection candlestick. For analysis, both of them, they are awesome. I have to be honest here. They are awesome. If you want to make your analysis, use these two candlesticks only. These two candlesticks only. Oh, I think I repeated this two here. Sorry about that. For placing stop loss, here is maybe on the engulfing candlestick. And yes, also here is maybe and yes, is because you have to use this one here with the supply and demand zone so that they can work together to make a proper stop loss level. So to predict the next candlesticks, this one is the best, even this one is the best. So before we move on, you have to understand everything that we have covered here. And never mind the number 5 here because it's the same thing. I didn't know that I repeated this one, but it's fine. So let's move on and get an understanding of an engulfing candlestick pattern. This is a bullish engulfing candlestick pattern. This one is a bearish engulfing stick pattern. You will see that on a bullish engulfing stick pattern, you will see that this candlestick here, the bullish candlestick, is bigger with the body than the previous candlestick, the bearish candlestick. The same thing applies on the bearish engulfing stick pattern. The bearish candlestick here, the body is bigger than the previous bullish candlestick's body. And sometimes it can be something like this. You can see that we have a low. Here we have a high and then a high. But if you notice properly here, the high of the bearish candlestick is higher than this previous one. But here it's not lower. You see, these two different things here, they are very different. I prefer this one because it's very powerful. This one here, I don't like it too much, but even though it's very powerful. So right now, I want to show you how the market behaves when this candlestick here appears. Even here, the next candlestick, what is going to do? The next candlestick, you will see it properly. We have a bullish engulfing stick pattern here. We have a low, we have a low. You see price action doing something like this. Let's say price was moving to the downside. Right now, you see a bullish engulfing stick pattern because you already know and saw that over the internet, they say that a bullish engulfing stick pattern always predict price to move higher. Let's say the next candlestick, you'll be predicting that it will go higher, but most of the time you will see that price here will just come and retrace back to this levels here. If the market is very strong, it will retrace back to the 0.38 of Fibonacci retracement. If the market is not slightly stronger, it will retrace back to the 0.5 and also the 0.618. Sometimes, yes, price can still retrace back close to this, maybe close to this low, the close of this bearish candlestick around this area here. Price is likely to come here. You have to know that. You will see it in some few examples when we move on. This is very real. Sometimes it can even come and tap around these areas here and then move higher. So that's the thing that you have to understand. Here, this one here is an important level. Even here is an important level. Let's say right now we have a low like this. This is a low. We have this candlestick here. This low of this bullish candlestick, I mean this low here and this low here will be very, very important through your analysis. You see, I told you that the next candlestick here is likely to come around this area and shoot high. Even on this one, it's likely to come here and shoot higher. So if right now we have a low of a bullish candlestick in an engulfing candlestick pattern, that means this low here is very important too. Price is likely to come to these areas and shoot higher. So that's all the information that I have on the engulfing stick pattern. And also, before I forget, and also you have to draw your Fibonacci retracement. This 0 on a bullish, a 0 should be at the top and 1 below. And then on a bearish, it will be vice versa. On a bearish, the 1 will be at the top and then a 0 below. And then when drawing your Fibonacci retracement, you will start at the low and high of the both candles. You will start from this low and then to this high when we are doing it on a bullish candlestick pattern. I know someone will say I'll start here from here, but because we are tracking the whole candlesticks here, this is going to be important. So for now, for instance, if we had this low here, the low was here, that means this one here, it will be around this area because we will be starting to draw our Fibonacci extension retracement from here to this high here, this high here. You have to remember that. So that's the information that I have on the engulfing stick pattern. So let's move on to an example on a chart so that you will see the behavior of this candlestick pattern. We have this area here. We have this bearish candlestick. The body is bigger than this previous candlestick. This previous candlestick's body. We have a high, we have a low. Have a low around this area. We have a low here, and then we have a high. We have a high. To draw your Fibonacci extension, you will start from this area and then to this high, because this is an engulfing candlestick. We are not going to do it on one candle. No, this is a no. So from here, the next candlesticks, as I said before, it might retrace back to the 50%. You can see the retracement. It might retrace back to this levels here. But as we see from this candlestick here, it retraced back to the 50% here. It only retraced back to the 50% of the Fibonacci retracement. And you can see the 0 right now is below and the 1 is at the top. So that means if you were looking to trade in the lower time frame, let's say maybe this is your daily time frame, when you move on to the lower time frame, you will be looking to trade maybe at least to the 50% or the 0.618 or even the 0.786. This is the areas where you should be looking to go short in the lower time frame when the market closes with this candlestick. This will show you that the market is likely to come and reverse. So another example is this one here. We have a body. This one is way too bigger than the previous candlestick's body. So from here, we can see this one is not the same as this one. They look the same, but they are not literally the same. So from here, we can see that on the next candlestick, the market retraced back to the almost 23% of retracement. And then the market started to drop because this one is a powerful candlestick. You can see the market after making this, it dropped. After making this, it dropped. But here, the market just retraced back to the 23%. That is the focus that I said before. You must focus on these levels. So let's look at this one here. You can see that we have a bearish candlestick and then a bullish candlestick. When you see this candlestick pattern like this, you have to always focus on the next one because we can't always use the previous price action to predict the future. No, it doesn't work like that. All the previous things are in the past. So you think the thing that worked in the past, the bullish candlestick from the past, it will work in the future. No, we have to focus on the price action in the future, not this one. Because right now we are focusing when this price closes, we have to predict this candlestick here. This is the one that we need to focus on only. And from here, maybe let's say you plotted your Fibonacci extension from here to here. You can see properly that the market retraces back to the 50%. It's the same as the previous one around this area. So that means on the next day, if you are in the daily, you will focus maybe on the 1 hour or the 30 minutes to make your analysis like this and look to enter around these areas here. And sometimes, as you can see from here, price can literally come to this area, because right now we have even this low, the market can still come to this area. So that's the one thing that you should know and focus about. The market can still come to this low or even the close of this bearish candlestick, and sometimes it can even touch here and then shoot higher. So that's everything that I wanted to cover on engulfing candlestick pattern, but we are still going to make some huge improvement when we move forward with this video. So right now, let's move on to the hammer or a rejection candlestick so that you can understand, and in the end we are going to combine the two and build a trading strategy so that you can have an edge over I don't know. So let's move on. So for now, we have the hammer rejection candlestick. A hammer is a bullish or a bearish candlestick pattern that appears at the end of a previous trend. If the market is bearish, the market will make a hammer at the end and then push higher. It has a smaller body and long wicks to show a sign of reversal. Let me tell you how these wicks behave. You see these wicks here, they show you that here we can see that we open, let's say we open, made a high and then reversed and then close around this area. This one was stronger, but now this one pushed them down, you can see. So let's analyze even this one here. We open, make a low and then made a high and then it got rejected and closed. Here they were stronger, but this one pushed them lower. You can see that there is something. You can see here we have a bearish, here we have a bullish, but they tell the same story. We move high, reject, we move high, reject, but they have different colors. So that means this here is the past, here is the past, this one here is the present price action. So that means even though they have the same rejection and the same a different color here, they still tell the same story to show us that the market was moving higher, right now is going down. The market was moving higher, right now is going down. So that means this one is the present price action. I hope you understand there. So let's do this one here. We have the same thing here on the bullish side of view. The market, let's say it was shooting lower and then you see this candlestick here. Do you still believe that the market will still go down after I have told you the same story here? This candlestick here, it shows us the market was tend to push lower, but then it got rejected and shoot high. The next candlestick, it might be a bullish one. You will see it in the next example. So from here we can also see this, even this one is the same thing as this one. They tell the same. That is why I said that you must focus on the present price action, not the past, because that will make your trading decisions even harder. For instance, let's say right now you have a structure like this, let's say like this, but then price is around this area. Do you still believe that the market will go up or the market will just shoot? You have to read price action from this area. No matter if you have your break of structures, your order blocks, supply and demand zone, you have to read price action from here. The more you backtest, guys, this one is going to be pretty much simple to understand. I'm not sure if I'm explaining it better or not, but I'm trying my level best just to give you all the information that I can. So from here, let's move on to another example of this rejection candle and a hammer candlestick. Here we have a chart here. I want us to read it from this area to here. Let's start from this area. We can see here we have a bullish candlestick, a bearish candlestick, a bearish candlestick. Look at this candlestick here. It was like this. It opened, shoot higher and then shoot lower aggressively and then close. This one is the present price action. So meaning price is likely to push again lower. There is no way these ones are still available in the market. No, doesn't work like that. And then after this price action here, we can see that we have this bearish candlestick and then we have a bullish candlestick, bullish engulfing candlestick. We can see the body here, the body is big. And then price, look at this next candlestick. It retraced back near this. So let's say if you are in the daily time frame, again in the 30 minutes, you will be looking to enter around these areas here or here so that you can catch the high of the day, okay? So let's move on. We can see price was shooting higher and then we have a high here and then price spiked above this previous high here and then closed bearish. Do you have that information? Price did something like this. Let's say we have a high here. This high here is this one here. I'll write it 1. Price then opened and then shoot high aggressively and then came down and then closes. These ones are not present anymore. The market rejected quickly. We have this second high here. We have this second high. Then after this candlestick, have to predict that the market is likely to reverse and then drop lower. So that means in the lower time frame, you will be looking to enter short around these areas and then go lower. And you can see here the market made this and then shoot aggressively to the downside. That's the information from here. Don't worry, we are going to reach this area. If this video is going to be long, you have to be relaxed and understand the information that I am sharing with you guys today. And then we can see that we have another one here. We have this bullish candlestick. The market is trying to push lower. I mean, we have this bearish candlestick and then we have this bullish candlestick. That means the market right now is trying to push higher. But then we have this weird candlestick here. This one here. You see this wick here is telling us a lot of information. It goes to show that they tried to push price lower. They tried, but then the market said no. We are still going higher. And you can see that they went and closed it bullish and bullish again. And then lastly, people saw that no, the market is pushing higher. Then they went in hard and then they rejected again here. You can see that if you read price action properly, you will understand. Even if you see this candlestick here, it will tell you that price is likely to make a huge candlestick like this one here. You will see it when we move forward. This kind of behavior, it happens a lot in the market. So then people said no, we are taking our profit. Then the market dropped lower aggressively. Then we have this candlestick. They tried to push lower, but then it got rejected again. You can see we have long wicks, but this one is just previous price action. Even if you try to enter short with this candlestick here, you will be in your loss. Then the market pushed higher. We have this ones here. The market shoot lower. And then we have this one. The market made a bullish engulfing candlestick. This candlestick here. Let me erase this so that everything can be clear. We have a bullish candlestick right now here. Bullish engulfing candlestick here. So that means in the lower time frame, you will be looking to enter short around this. You will be looking to enter long around this area to push the market high. And then here we can see they were fighting. The big players were fighting into the market. But it goes to show that this is a sign that the market is just trying to push lower. You can see that we have this almost hammer candlestick here, and then we have a proper hammer. And then on the next day, the market shoot lower and then it shoot lower again, because you can see that we have one rejection, two rejection, three rejection. But on the downside, we only have one and two. And then on the last one here, the market shoot lower because so many people got stopped out around that area. And then we have another bullish engulfing candlestick around this, and then price retraced almost to the open of the bearish candlestick, which is this number 2 here. And then price shoot aggressively to the upside, and then price was moving higher, and then price was moving to the upside, and then we have this candlestick here. You can see that we have a bullish candlestick, and then on the next day, price tried to push higher and then got rejected very aggressive. That is why you see this short move. This candlestick here is the one, the bearish engulfing candlestick that trades above the previous candle's high. I will show you on the next slide how this candlestick behaves. And you can also see another candlestick here that traded above the previous candle's high and then closed bearish. Then the market shoot low. We have another one here. It traded above the previous candle's high, which is the bullish one, and then closed with the bearish candlestick. Then the market shoot low. And then we have a bearish engulfing candle here, and then price shoot low. And after this bearish engulfing stick pattern here, you can see that price tried to shoot higher, but then got rejected. And then that's why we have this candlestick. So let's move on so that I can show you how the candlesticks behaves, the engulfing candlesticks behave. I want to show you the bearish engulfing candlestick or a bullish engulfing candlestick that trades above or below the previous candle's high or low. We can see the first one here. We have a bearish engulfing candlestick here. The next candle or the next moving days should be going low. And then we have another one here, a bullish engulfing candlestick that trades below the previous candle's low here. This one, it traded above this high. And we can see that after this candlestick, the market traded to the upside. And then we have another one here. It shoot lower aggressively. The next candlestick is this one. You can see right now the information is aligning. So let's find another one. We have another one here. Price on the next day, it shoot lower and then it pushed higher. And then we have another one around this area. Price just corrected and then shoot to the upside. We have another one here. This is just engulfing candlestick. And then we have another one here. On the next day, price made this candlestick. Here we can see that price just shoot lower. And then we have another one around this area. It shoot lower. We have slightly another one here. Price shoot lower. You can see that there is something that is aligning here. And then we have this normal one. This is not a bearish engulfing candlestick. Is the something like a hammer here. We have something like a hammer around this area. I hope I am providing as much information as I can today, so you have to understand, guys. So for now, let's move on to another chart so that we can do all of those combined and see how the market can be used using these candlesticks to our advantage. So let's see the first one. We have this candlestick. This is the 15 minutes. We can see that we have this chart here, okay? But all the information that I have shown you, they will be present from this area to here. So right now, I will try to show you the possibilities that you can do. This is the 15-minute thread, by the way. You can use this for scalping or anything. You can use it to maybe for the higher time frame, to trade the higher time frame. Let's say maybe you use that candlesticks pattern to use them in the lower time frame for analysis, because you already know how the market behaves after they print out those information in the higher time frame. So in the lower time frame, it will be just for entries and so forth. So let's start with the reading. We can see that here, let's say we have a break of market structure here, and then you are looking for price to come down, and then you can see that candlestick here is available, that trade below the previous candlestick's body. And we can also that obviously your stop loss will be around this area, and we can also see that the market made another one around this area. We have one and then a two, so that means you will be looking to go long here or even here when this candlestick closes and target this high. If you missed this entry because you wanted to target this high here, you can still enter with this candlestick here and then look for the market to push higher. Even here, the market made that candlestick, then the price shoot higher again. We have a bearish engulfing stick, price retrace back to the previous candle's open, then the market shoot lower. We have this one here, the market shoot higher, made a correction around this area. You can see even if you draw your zone around this area, remember your zone start here, can still go short with this candlestick. The market was shoot lower. You can see we have another bullish engulfing candlestick that made price to the upside. We can target this high if you're going to go long. Here we don't have anything. We have this one here. Let's say maybe you have a higher time frame zone around this area. You'll be looking to go long with this candlestick that trade below the previous candle's body or low. You can also see that this one here. Let me erase this and show you something. You see this low here. We have this low. We have this high. We have this low. We have this high. Let me do something like this. Let's say right now you have a zone around this area, and then price trade below it and then do something like this and then close bullish. Price is going to go higher. This is just fakery here. I'm not sure if this is something that is called fakery or not. You can leave a comment below. So you can still enter long because price traded below this bearish engulfing candlesticks low and then closed bullish. Price trade was very strong to the downside, but then price started to rejected aggressively here, and then price shoot to the upside. Then we can see the price retraced, shoot higher, trace. Here we can see a breaker, you can call it a breaker block whatsoever, and then price closed with this candlestick that trade below the previous candlestick's low, and price was shooting higher. We are trying to find as many setups as we can. You can see a bullish engulfing stick pattern. It came here to the open, here came around this area, the retracement. So that means if you have backtested, you can trade only this candlestick pattern only, and then place your stop loss here. Maybe target this highs, or even this high here. So let's move up. We are moving high. Okay, what is this? We can see that price traded above this high, made this candlestick and go short. But I don't like this one because there's no proper way to put my stop loss around this area unless if I put it around here. But here we can see price shoot lower. Let's say maybe you are scalping, you entered on the close of this bearish candlestick, price was shooting lower. So that means from here you can see that there is no lower lows, it's just higher lows, higher low. Then price closed with a bullish engulfing candlestick pattern also that traded below the previous candlestick's low. I will enter this trade and then shoot to the upside. We move higher. You can see that we have another trade set up here. Move lower, higher. Have this one already failed. That means you'll be stopped out on this one. You see this one here. It trades a high and then it do it the second time. I love this one. Can do it 1, 2 and 3 times. On the fourth one is where I don't want to say, because most of you will do it without even understanding how to do it, but I want to tell you what I do on the fourth one. Even on the third one, I do it. You see, if you do it the first time, the second time, on the third one, this is where I trade. Even on this one, this is where I trade. But I won't tell you what I do because most of you will risk and then you will blow your account. But I know how to use it properly. That is what I did on the trade setup that I have shared on the Telegram. You can also find the link in the description below. So let's see, we're moving lower, 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 lower. We have another one here. We have 1, 2, we have 3. Guys, I won't tell you what to do. Don't say you heard that from me. Okay, let's move forward. And then we have this low here. Here, don't have anything proper. Don't have anything. We have this one here. It traded below this lows, this low, and then I will enter with this one. Here we don't have anything. We don't have anything. We don't have anything here. Don't have anything here. This one here is proper, but then enter, then you got stopped out around this if you were targeting this high. Okay, so right now let's move forward. Okay guys, I'll show you one or two few examples, okay, about this one here before we move on to a real chart example. You can see we have one price traded below this previous candlesticks low and then close bullish. Sometimes you'll identify this if, like, let's say maybe you are not on your screen and then you open your charts and then you find this kind of behavior in the market. And then we have the second one around this area. You can still enter this one, but then the market, we have 1, 2, then we have another one here, and also this is a engulfing candlestick. So what do you think I am going to do with this? This is just money. This is money here. Price have to do something like this, but don't say that you heard that from me. Use proper risk management, guys. Here we can see something similar that you already know. Here you can see this is just reading pure price action, but this time it closed bullish, but this is just a rejection candle, guys. You can see rejection, price shoot high. Let's move forward. Here guys, you can see we have a bullish candlestick here. We have a bearish candlestick around this area. We have price that traded below this candlestick. We have one price was trying to shoot higher, and then we have a low, and then price again traded below this previous candlestick's low and then closed with a bullish engulfing stick. As I already said, we have this. I already said that price is likely to come around this area. It's likely to come here. You can see price touch here. You enter, put your buy limit order, put your stop loss here, and then you trade to the upside, because price tried this thing 2 times. This one is the second time here. I told you I'll be expecting this kind of move into the market. That is why you see me holding trades for maybe sometimes a week or so, is because I have already have that experience of doing this kind of things. So let's do another one. You will see this kind of move that is happening, guys. We have the first rejection is this one. We have the second one. Here is not slightly visible enough. Here you can see it properly. You can see this bearish candle is traded above this candlestick's high and then closed bearish. But then let's say if you entered short with this one, you will be stopped out. If your stop loss is above this highs here, you'll be safer here. But price did the third time. What do you expect? A huge move is just coming. You can see it with this one here, this huge move, and you can see it. Price even go shoot lower very strongly. Let's see another one. It's around this areas here. Have a bullish engulfing stick here. Price traded below this. This is the first one. It's tried to shoot higher, and then we have this lows that are equal. You can say equal lows or something like that. And then we have this here. Price traded below this. It shoot lower aggressively and then came up and then closed bullish. So that means you can enter long here, and then you can also see that price also made the third one here. We have the first one here. What I'm trying to explain, guys, is this. We have to look for a bearish candle and then a bullish candlestick like this that trade below this low, okay? And then this will be your confirmation candle. Never mind my handwriting, okay? Let me do something like this. This one is red. We can see this one is the first one. Let's find another one. We have this, the second one, and then price made the third one here with the bullish engulfing, and then price closed with this huge candlestick. Don't say I didn't, bro. Guys, you didn't hear this from me. And then price shoot to the upside. Look at this bullish candlestick, and this one here, this candlestick here tells you a lot of information alone. You can see the rejection. You can even say you put your buy limit order, maybe let's say around here, around this high, around here. Put your stop loss below. You enter here, you enter here, and then look at how price action moved. Even here, look at how price action moved. Okay, I guess right now it's time to move on to a real chart, because this is not the end of the video, guys. If you like this video so far, please consider subscribing to the channel, give this video a like, come to our Discord server, come to our Telegram, subscribe, like, share. Okay, and I have a special offer. If you come to our Telegram channel, you will see it in the next coming weeks. So right now, let's move on to a real chart so that I can show you some few examples. You can now see clearly. This is GBP USD on the weekly time frame. So from here we can see a lot of things. Let's look at the first one. Let's find this one. We can see that we have an engulfing candlestick here that traded below the previous candlestick's low. Let me make this lines to be clear for everyone. You can see that this candlestick here, this bullish candlestick here, traded below this previous candlestick's low and then closed with a bullish engulfing stick. Here in the lower time frame, this is where we will be looking to go long. So let's move on to the maybe 4 hours time frame. You will see something happening around this area. Let's move on, maybe let's say 4 hours. What is this? The candlestick appeared here around this area. Then the market shoot to the upside. And as I told you before, if price makes a bullish engulfing stick, price is likely to come to this area. It's the same thing that I did in the higher time frame. We did something like this. This is your lower time frame for entry. That means you will be looking to go long here using a buy limit. And then in the higher time frame, this is where we were looking to go long around this area. But then in the lower time frame, we are doing the same thing. And also we can also see that price also traded below this previous bearish candlestick's low and then closed bullish with an engulfing candlestick pattern. And then price shoot to the upside. Look, and aggressively so. Can see. Let's say you entered around this area, put your stop loss here, the 70 pip stop loss, because that was the weekly time frame. You will be looking to target, I don't know, maybe around this highs here, 300 pips easily. So let's do another one. Let's move on to the weekly time frame again. Even around this area, you know this candlestick here. I have predicted this move here. If you follow us on Telegram, you will know that this move here, we predicted it to the downside. Let's move on to the 4 hours or 3 hours. You will see this moves here. Price did not even come around this areas here, but something that you should know that in trading you'll miss a lot of trades. Price was just shooting lower. If you were looking to go short, you could have tried to enter short with this candlestick. Where's the another one? With this candlestick. Don't worry, when you are entering around this area, your stop loss will be around here, your stop loss will be around here, stop loss will be around here with this candlestick here. That's how simple it is. Let's move on and find another example. There's a lot that you can do with this, because right now I'm just doing it on the higher time frame. In the higher time frame, in the lower time frame, it works amazing. Okay, let me show you the last example of the video. Here we have this bullish candlestick. We have a bearish candlestick here. And then we can also see that price traded below this and then closed with a bullish candlestick here. And you can also see price is at our almost near the demand zone, but it did not hit the demand zone, but that doesn't matter. And then we have this candlestick here. So even if we move on to the lower time frame, you will see that price made a perfectly sweet setup. I believe I made this setup. I think one of the members entered long around this area and he closed around this areas here. So let's move on to the 4 hours and see if we can find a setup around that area. There's nothing on the 4 hours, I believe it was on the 3 hours or so. Forgot. It was on the 3 hours time frame. It was like this. This is the previous low that was taken out. You can see we have the first one here that did not go up, but stop loss will be around this area. Then we have the second one here. It did not go up immediately, but then after that price just shoot lower. As I told you before, if you see 2 times this thing, look at this price section. Look at this sweet price section movement. Look at this sweet price section. Price was just crazy to the upside. Let me check the 2 hours time frame. On the 2 hours, there's nothing here, but price was just strong to the upside because that was the weekly time frame, nothing more. So I guess, guys, this is the end of the video, I will just see you on the next one. You can see on the 1 hour we have 1, we have 2, we have another one here, we have 1, 2 and 3 here. On the 4th one, this is the candlestick here and stop loss is below here. You just enter on the retracement and then price closed bullish. When price closes bullish, if you see 1, 2, 3, when price closes bullish, put your stop loss and then don't say you didn't hear that from me. You see, price was just very strong, guys, and I know some of you will just go full margin on this. That's not what I told you. Some of you will go full margin. Price was just in one day 100 pips and then price just shoot high aggressively to the upside with a stop loss of 15 pips and then you gain around 360 pips. That is why you see most of my trades are around that areas. Is because I use this kind of thing, but it's more, I think I will go a day explaining this kind of behavior. But if you want to know more, please, you can just contact me, then I'll teach you everything, but it takes time. That is why I said I have a special offer for you guys. You will just find it in the Telegram. Okay, I'll see you on the next one. Stay safe, stay blessed, have a happy life, happy mind, and then stay strong. See you on the next one. Always use a stop loss, bro. Use a stop loss.